Hi, good morning, everyone. We're going to do a trade breakdown. I'm going to do a trade breakdown here of yesterday's short from the New York session. Um, so let's go ahead and get into it. Here's the trade. Okay, we had the short from the 650 level down to the lows created just before the open. Um, Very solid trade, perfect market maker sell model. Um, and it was at all-time highs, which is a little risky. But I'm going to show you why I took the trade, and I would take it again. This is a trade I would take 100 out of 100 times. Um, so let's go ahead and get into it. So let's go ahead and just rewind to where we were pre 9 a.m. open, 9:30 open. Um, so we had SMT at the highs just from the open. Okay, so this is 9 a.m. This is 8 a.m. here. So we already had SMT between ES and NQ at the highs. Okay, so that's already making me think that we're gonna possibly have a short. And then what I was doing is monitoring this market maker buy model. So we have the model here, SMR down here, left side of the curve, SMR right side of the curve. And what I wanted to see was price get above this bearish order block and then continue long, and that would confirm longs for NQ. Instead, what happened was NQ opened up. Um, NQ opened up at 9:30. Let's go ahead and fast forward to that. So NQ opens up at 9:30, and we have a little miniature market maker model here. Left side of the curve, right side of the curve, SMR. 9:30 opens, distributes higher, taking out the market maker model. So at that point, definitely not really looking for longs because during this time, ES has still failed to get above that PD array. Okay, so ES is rolling over at the time. There's another SMT at these cycle highs, and while NQ keeps rocketing forward, and YM is also rolling to the downside. So now as price is going up, I'm looking at this 650 level. We're at all-time highs. I'm also looking at this. This is the closest price action PD array. So we have the prior cycle high here. Okay, but we're well above that. So then really the only thing I can do is watch how price reacts to this 650 level in tandem with how ES is reacting. Okay, so um, price just keeps rallying higher, and notice how there's not many PD arrays here. We have a bullish order block, a bullish order block, fair value gap. So in this scenario, I zoomed in to the 15 second, which is pretty good. It breaks it down nicely. And then I also zoomed into the 5 second. So this trade was actually taken on the 5 second chart. Um, and then price starts to break down. We form the high here at 938. 942 is when I can take the trade. So I'm not really like rushing to get in. Right now I'm just watching. Right now I'm just watching the two charts, ES and NQ, and waiting on 942. So there's no rush for me to get into this trade. All I'm doing right now is looking how the price action from the left side of the curve is reacting to the right side of the curve. So what I mean by that is like this fair value gap, okay, we've gotten below it, but I'm not going to use that for a change in the state of delivery. We have these order blocks here. I'm not going to use that either because what I want to see is something like this order block be traded above, come back down, used as support, and then that makes the new high. And then we don't make another high after that. Okay, so I'm not really interested in using anything above here. And then also being on the 5 second chart, You don't want to just jam it up on the first PD array and say, okay, we've inverted that. That's a CSD. We're going to go short. That takes a lot more conviction, and you'll lose a lot more trades that way. So I like to go a little further down the left side of the chart, left side of the curve on the 5-second chart or 15-second chart even. And so what I was actually looking at was that fair value gap. Okay, we didn't quite respect it like I want. So what I do is drop down to this here. Okay, so we have this nice order block, displacement above with a fair value gap, tested it as support, made that last run higher, SMR there, okay, right here. There's SMT there as well, okay. So everything here is left side, right side. And then from here, I'm just waiting, okay. I'm thinking, okay, like this is a possible trade, putting the stop here, entry here, would be on that breaker, okay, that old bullish order block. And then we get some confirmation here, okay, we get down below the breaker, get close to 942. So at this point I'm looking to take the trade on any type of retracement up into this blue box, okay. So I'm not setting a limit order. I just mark it into this order. And then the target would be the current cycle low, previous 30-minute cycle lows down in here. Okay. That's the SMR that formed this buy model. Okay, this buy model here. That's going to be my target. And then price comes back up, hits the blue box, the area at which I'm trying to get in this trade, and then you just go short. Okay, I marketed it in on this candle here, this red candle, on the 15-second chart. Okay, so here, 9:42 and 30 seconds was the entry, and from there it just, there's nothing to do. You make your entry, you zoom out, and then from there you just follow the price. You just follow price. We'll use the 15-second chart. You can use the 1 minute or the 5-second, but you just follow price. You close down below, you come up and test it. Once you test that and start dropping lower, you look for the next PD array. So we have this bullish order block. Okay, once we get below that, we close down below here. We come back, test, drop a little lower, come back. So once we drop here, we close down below a few more PD arrays. So that one there is the next closest. So we've used that as support, close down below it, come back, use it as resistance. Okay, once we go from here to here, so here to here, have we gone down below another PD array? We've gone down below this. It's kind of small, probably wouldn't use that. And then basically I'm waiting on this. Okay. So we come here, come back up, go down, close below, retest here, drop lower. We get down below this order block, and there's no retest. So at this point, we're just distributing from the reversal. So that's why it's important to get in at the right opportunity, because you put yourself at risk at getting stopped out if you're chasing price down the right side of the curve. So it's important to really get in at that low risk sell or low risk buy. And then maybe the second stage of distribution, because for one, you want to wait. For one, you don't want to enter a trade. Like if this is your target and this is your entry, that's the swing. You don't want to enter the trade below 50%. You want to get all your orders in before we get below 50% of the swing. And then at this point, price just keeps dumping. So just keep marking your arrays. And then you have a closure below, you don't retest, that's fine. Price is moving, it's not going to come back. Okay, we close below, we come back and retest, then we drop down, and finally hitting the target here at 950. So this was a very quick trade. Took a partial there, 950, took the rest of it off, and that's really the trade. That's all there is to it. Okay, we had accumulation occurred in this prior 90-minute cycle. Okay, the blue box accumulation, the red box manipulation, and the green box distribution. Okay, we ended up distributing down towards new week opening gap, and we hit the bottom of it. And if you held, that was the complete trade, about 200 points. But for me, I was happy with taking the profit below the lows. But that's a classic New York style delivery. I mean, this was a little more difficult because you're using a fixed price level. You don't have any price action to the left. So this takes a little more experience and a little more confidence. But yeah, let me know if you guys have any questions.